So Warren Buffett's annual letter was written in February of 2022. And then just 2 months later, Berkshire Hathaway had their annual general shareholder meeting. But within the space of those 2 months, the world turned upside down. Hey, how's it going? Welcome back to my channel. This is Pradeep and you're watching Vlog of Note. In this video, I'm going to tell you about 3 takeaways that you can take away from Berkshire Hathaway's annual general meeting. Let's get started. So first of all, usual disclaimer here, I'm not a SEBI registered expert or an advisor. I'm just the person who has made a reasonable amount of money by investing in the stock market. If you want to make your own investments, you should do your own market research. Now, the Woodstock for Capitalism, also known as Berkshire Hathaway's annual general meeting, it's a shareholder meeting that happens in Omaha because that's where Warren Buffett is based, the Oracle of Omaha. Now, Berkshire Hathaway is a corporate extension of Warren Buffett, and Warren Buffett, in my opinion, is the best investor of all time. Now, this meeting has been happening for the past several decades. However, for the last 2 years, it hasn't been happening because of, well, you know, COVID. Over 40,000 people attend this meeting. That's why it's called the Woodstock for Capitalism, and it involves various fun things like a 5-kilometer run, a 5-hour question and answer session with Warren Buffett and Charlie Munger, and also various shopping sprees from various Berkshire Hathaway brands like Coca-Cola and See's Candy. Now, this year was particularly interesting because of inflation and Berkshire Hathaway's buying spree, so we had some really spicy questions. There are 3 takeaways that I think that you can take away from Berkshire Hathaway's annual general meeting. The first takeaway has to do with the arbitrage opportunity in ACTIVISION-BLIZZARD. Now, here's the scenario. ACTIVISION-BLIZZARD is a gaming company who makes several great games. I haven't played any of them in the last several years. However, they're a pretty big publicly listed company in the US. Now, Berkshire Hathaway, it turns out, has picked up about 9.5% stake in this company, valued at about $5 billion. Now, this in itself is a little bit strange because it's a gaming company. Berkshire Hathaway, I don't think, traditionally invests in these type of companies. And also, in January of 2022, Microsoft, you know Microsoft, announced that they were acquiring the entirety of Activision-Blizzard for about $95 a pop. Now, that price is interesting because the price at which Berkshire Hathaway bought 9.5% stake, it's 20% less than the acquiring price. Basically, Berkshire Hathaway put in about $5 billion, and then just over 3 months later, they sell their entire position to Microsoft for a 20% profit or $1 billion. Not bad for a few months' work. Now, if the deal doesn't go through because of some regulatory pressure, Berkshire Hathaway still has a stake in a pretty good business, in my opinion. Do they continue to hold the stake? Well, that really depends on Warren Buffett. Now, Warren Buffett has usually said that you should buy a stock and hold it for several years, compounding and all of those good stuff. However, in this particular investment, it looks like he took advantage of an opportunity and made money for his shareholders like any good trustee should. The next thing that I think that you can learn from Berkshire Hathaway's annual general meeting is how to fight inflation. Now, everybody is talking about inflation. It's basically a scenario where there is too much money and the price of everything goes up. How do you fight inflation? Well, according to Warren Buffett, inflation swindles us all. For example, if you're making about $10,000 in annual salary and you get about 10% increment, that means you make basically $1,000 extra. However, if inflation is at about 7%, then basically in real terms, your salary is only increasing by about $300. Therefore, inflation swindles us all. How do you fight inflation? Well, it's the same advice that he gave almost 12 years ago. It's basically you have to invest in yourself to make yourself exceptional. Imagine that you invest in yourself and become the best doctor or the best lawyer in your city. Then you can trade that exceptional service for other people's goods and services, irrespective of whether there's an inflation or a boom economy. Now, invest in yourself doesn't mean you take yourself on a vacation. However, I think everyone should use inflation to improve their net worth by investing in themselves, educating themselves free of tax. The third thing that I think that you can learn from Berkshire's annual meeting is basically you should buy low and sell high. Now, this might seem obvious, but a lot of people have difficulty doing this. You should take advantage of every opportunity. Now, Berkshire Hathaway and Warren Buffett have long spoken about Mr. Market. Mr. Market is a creation of Benjamin Graham of The Intelligent Investor, and it basically says that the market is a manic depressive. Sometimes he goes up, sometimes he goes down, and he's always shouting about buying or selling. You should be able to make your own decisions. Now, over the last 2 months, if you've invested in the US stock market, you probably lost a lot of money. However, at this point of time, when all stocks are going down, that's the time Warren Buffett wants to buy. Now, for a long time now, people have been criticizing Warren Buffett and Berkshire Hathaway for keeping so much money on their books. Basically, they had about $140 billion in cash and cash equivalents, mostly in treasury bills of the US. Now, these bills get interest of about 1 to 2%, and as I just said, if inflation is 7%, you're basically losing money. Warren Buffett has spent about $40 billion in the last 2 months alone in investing in various common stock. For example, he's vastly increased his stake in Occidental Petroleum and Chevron. You know both of these companies as classic energy companies, fossil fuel companies. You can't deny the fact that for the next 10 years, fuel is going to be on the up, and for the next 200 years, we're going to be dependent on fossil fuels. Now, that looks like a pretty long-term investment in my opinion. He also purchased about $4 billion or 11% stake in HP, computers and printers and accessories. At least as a consumer, I can tell you that HP is killing it in the Chromebook market, the personal computing market, and obviously in the printing market. Now, price is what you pay and value is what you get. Let's assume he paid about $4 billion for a stake in this company. However, if you consider the fact that fundamentally this company makes $4 billion in annual free cash flow, I think this deal is a pretty good investment on Buffett's part. Overall, if I had to take one message from this meeting, it's invest in yourself, taking advantage of every opportunity. If you guys have your own questions, please do drop them in the comment section down below. As always, please go over to YouTube, subscribe to the Vlog of Note channel, ring that notification bell so that you never miss a video, and I will see you guys in the next episode.